Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories behind company filings, and today we've got a doozy that is going to sound like a confusing real estate deal, but has some interesting implications for shareholders. So, Rithm Property Trust Inc., or RPTPRT for short, filed this Form 8K on the 19th of December 2025, and this isn't your typical day-to-day report. This filing is about a pretty significant transaction. A closing of an acquisition that brings RPT into a piece of a commercial real estate portfolio. Now, RPTPRT itself is a real estate investment company, but this deal is happening in the context of a larger acquisition by Rithm Capital Corp. Think of Rithm Capital as the main player here, acquiring Paramount Group Inc., and as part of that big deal. RPTPRT is picking up an indirect minority interest in something called Paramount Group Operating Partnership LP. Basically, RPTPRT is getting a small stake in a partnership that owns a bunch of commercial properties. It is important to note that this specific investment, the RPT-PGA investment as they call it, got the thumbs up from RPTPRT's independent directors. That is a good sign, suggesting that the deal was reviewed and deemed fair by people who aren't necessarily conflicted. So RPTPRT is putting down $50 million in cash for this stake. They're buying about 3.9% of these entities called Aggregator I and Aggregator II, which are basically investment vehicles that will hold the ownership in this operating partnership. They've also committed to potentially chipping in another $7.5 million under certain conditions. They're financing this whole thing with cash they already have, which is generally a strong way to fund new ventures, avoiding the immediate pressure of taking on more debt. What exactly are they getting into? Well, this portfolio includes 10 office properties. The report lists them out in New York City. We have big names like 1633 Broadway, 1301 Avenue of the Americas, and 1325 Avenue of the Americas. Then over in San Francisco, there is One Market Plaza and 300 Mission Street. These are prime locations, suggesting significant value. Now, here is where it gets a little intertwined. Rithm Capital is managing all of this. An affiliate of Rithm Capital, RCM GAM Manager LLC, is RPTPRT's. External manager and another affiliate, Rithm Asset Management LLC, will be running the show for these aggregator partnerships. Rithm Capital will be the one actually managing the properties through its own subsidiaries. Even the top brass at RPTPRT are connected to Rithm Capital. Michael Nierenberg, RPTPRT's CEO, is also the CEO of Rithm Capital. And Nicola Santoro Jr., RPTPRT's CFO, also holds the same title at Rithm Capital. This level of overlap shows a very close operational relationship, bordering on, if not outright integration in some aspects. The filing does state there is no material relationship beyond these transactions, which is an interesting legal phrasing. Now, for the financials, this report is a bit of a teaser. They're telling us about the deal, but they're not giving us the deep dive on the financial statements or the pro forma information yet. They're saying they'll file that by amendment within 71 days. This means the full picture of how this acquisition impacts RPTPRT. Balance sheet and income statement isn't available in this initial filing. They're opting for what they call the fair value option for this acquisition, which means they'll account for it differently. This fair value option approach means they likely won't have to prepare full pro forma financial statements, showing what the combined company would look like as if the deal happened in the past. Instead, they'll provide a narrative discussion later about how the deal affects their results and balance sheet. It is a way to simplify some reporting requirements after a deal, but it delays the detailed financial impact for investors. And finally, the report is signed off by Nicola Santoro Jr., the Chief Financial Officer. So, what is the story here? RPTPRT is making a strategic move, investing $50 million to get a piece of a significant commercial real estate portfolio. It's a move that ties them even closer to Rithm Capital. With considerable overlap in leadership and management, the immediate financial impact isn't fully detailed yet, which is a bit of a waiting game for investors. However, the quality of the properties involved suggests a potentially valuable addition to their holdings. The risk here lies in the continued tight integration with Rithm Capital, and the fact that they're buying into an existing portfolio rather than developing their own. We'll need to see those follow-up financial statements to really gauge the performance and valuation of this RPT-PGA investment. What do you all think about this strategic move by RPTPRT and their close ties with Rithm Capital? Are you excited about the potential of these prime office properties, or do the reporting delays and leadership overlap give you pause? Let us know your thoughts in the comments below. If you found this deep dive helpful, give us a thumbs up and subscribe for more. And don't forget to join our Discord community linked in the description for even more real-time discussions. Thanks for watching, and we'll see you on the next episode of Corporate Decoder.